not all unit trust is equal. Okay, I think in Malaysia we can have easily about more than 100 funds investing in Malaysia equities. Okay, and then if you were to categorize them by their performance, you will have like first quartile, second quartile, third quartile, and the bottom quartiles. Okay, so what is important for us is to use some of the criteria that I mentioned just now, as to how do we select the fund manager, looking at performance, and to look at how consistent is that performance. Okay, and then to determine whether this fund has been performing well or not. Okay, and then whether we should actually shortlist it to be the fund to be constructed into the portfolio. Past performance may not guarantee a future good result. No? So then how do you make decisions based on the past performance? Past performance does not guarantee that you will get good result. But past lousy performance definitely do not give me any confidence that I'll get good result. Because when we really examine those funds, those hundreds of these Malaysia equity funds, you can really see some of the funds given 3 years, 5 years, 10 years, always at the bottom, never really perform. You know, the reason why they still survive, maybe they still got enough agents to go and sell their funds. That's why they survive. But in a country like Australia, UK, or US, this company are all bungkus already lah. No, because Malaysia we have a special system called unit trust agency, that the fund management company can still get the fund to be distributed and sold even though the performance not so good. Okay, and the investor do not know, because investors always want to buy from their relative, ex-colleagues or schoolmate. Okay, but they do not know the quality of the fund they selected. Okay, so but in country like US, okay, there's no such thing called unit trust agency. You know, most of the fund are done through the bank, and also the independent financial advisor like Pigment and the like. So for that matters, with the kind of selection and stringent criteria that we impose and close scrutiny of their performance, those the bottom quarter or the bottom half of the fund manager will continue to be discriminated and sacked, and they will not survive unless they improve their performance. So one of my dream, my wish, is to hope that this force, you know, will be applied to the fund management industry in Malaysia, so that everybody will compete not by having a bigger agency to distribute the funds, or not going to rely on the bank to sell the fund for them, but by focusing into the market, sharpening their investment skill, give consistent and good return to the client, so that I can select them to help my client to grow their money in a steady manner. Private mandate, public mandate, not so private mandate, unit trust, you know, ETF, to me, they are all investment vehicle for us to achieve a return. But first, we need to categorize which playing field is this particular private mandate fund is playing. So if we are talking about Malaysia equities, no, then we will not be easily influenced by maybe the big name of this particular private mandate, the whatever track record they have got. Because when we look at the track record of one particular fund manager, especially like private mandate, we could be overwhelmed by the number, okay, or we could be confused by the number. So that's why what we need to do, and what we normally do in Pigment, is to compare, the apple to apple. Okay, so you claim that you are very good, in Malaysia equity fund, and then then show me the track record for the past 3 years, 5 years, and 10 years. Then I will take the rest of the fund from the rest of the unit trust company who's investing in Malaysia equity fund, and then I'll compare with you. Then I'll know, oh, actually you claim that you can do 20%, that particular year. Actually, it's really nothing, because there are peers, in the fund in the period of time can do 25%, 30%. In fact, the average Malaysia equity fund performance in the year is 25%. So it's really nothing to shout about. So that's why it's very important for us to have access to the kind of web of information, for us to really verify what they say, what they claim, and compare to their peers to see they really are as good as what they claim. How do I define a good quality fund manager? We got a few criteria to study, but generally we look at a few criteria. Number one, we look at the establishment of a particular company, okay, whether what is a track record of that group the company belong to, what is a parent company. And then number two, we look at the fund manager, what is his background, the person really in charge of the particular firm, what is his education background, what is his working experience, where does he work, what's the track record before he joined this particular firm. And then we also look at the process, the strategy they use, whether they are like bottom up, or whether they are more like macro kind of players, or whether they are active or whether they are passive. Okay, and of course we also look at the performance of this particular fund. And Wigman do not ask our client to invest into a fund who has got less than 3 years track record, because it will be too new for us to have any indication of whether they are good or not. Of course, I am a financial planner. I am not a investment research manager, things like that. In Wigman, we have got a separate team of investment research team headed by a chartered financial analyst. She definitely have got more criteria than what I shared today to select a good fund manager. Honestly, let me share with you the harsh truth of selecting fund manager over the past 11, 12 years when we deal with this unit trust on the online platform. You can see some fund manager who can really who's very eloquent, give you a very good picture about the market and things like that, and may give you good performance of 1 or 2 years, but unfortunately that performance do not last. So either the fund manager left, or sometimes the fund manager become too complacent, not as diligent before, so the performance got affected. And that happens. So far, I would say I never see a fund manager or one particular fund house that can continue to perform in all categories. What I mean is that in Malaysian equity, in global equities, in China equity, in technology equities, there's none. Okay, so that is the truth. So that is why to have a unit trust agent who represent only one company, and to help you to select a fund from that one company, to help you to select to construct a globally diversified portfolio, that is a very counterproductive job for you to do, because chances are there are a lot of other good funds which is available at other fund managers, whereby your agent will not be able to help you to access to it and put into your portfolio. Either he does not even know about it, or even if he know about it, maybe he can go to fundsmart.com to know about it, but he does not have a license and a business contract with this fund manager to get compensated if he were to recommend it to you. So that is a situation which is, I think, very much of a conflict of interest of those unit trust agents who are in the agency who represent only one company.